Good afternoon, everyone. It's Louisa. It is Wednesday, March the 4th. In my live stream this morning, I took two trades. The first one was a loss. The second one was in profit. You can check those out on the live stream from this morning. But I took a trade this afternoon, and this is a smart money reversal. I'd just like to take you through the components of a smart money reversal. It was 78 points or 3.53 RR. I was okay with that. That's an okay trade, I guess. Uh, it is non-farm payroll week, and so the price action is just, it's painful. It's um, liquidity levels are just challenging. It's high resistance. It's price retracing, lots of wicks. It is really, really difficult to trade, and I prefer not to trade this week. However, I did see this opportunity this afternoon, and I want to share it with you. So what I'm looking at is the candle that printed at 1412, and I'm on the 2-minute on this chart right now. So at 1412, I was thinking that the high for the morning or for the day was reached. Price moved down again. Displacement is very, very rough, which indicates to me that this is not an A+ setup. I just want to be honest about that. But price displaced down and formed this inverted fair value gap right here in yellow. So here is the inverted fair value candles, candle 1, candle 2, candle 3. So price came down, came back up into the inverted fair value gap. And you can see that the body of this candle at 1440 stayed inside the body of the inverted fair value gap. So wicks do the damage, bodies tell the story. The next candle of importance is this one here, and this one was at 1450 inside the macro, and then change of the state of delivery was down here. So overall, this is kind of like a B setup. It was a setup that I was looking to target the lunch lows down here, which we reached, and you can see right at this level, price reversed and is moving up now. But one thing to notice on this type of a trade, when we're trading high resistance liquidity on a tough week, is we can see that price is quite choppy. It doesn't really form any fair value gaps. Now we can see some real fast movement here. We've got change of the state of delivery, which is way down here, and then price finally starts to drop, but you can see the retracements are really, really deep, right? I don't like to see retracements come back all the way here. So for me to trade this type of price action, I have to have a stop loss that gives me lots of room for this kind of movement. I was pretty firm on the terminus being down here, which is lunch low. So for me, the lunch starts at 11:30 and then finishes at 4 o'clock. And so, but price repriced up, and then it dropped down again, then it retraced all the way back up again, and then it moved down again. So it's a type of trade that requires a lot of patience, and if you're firm on your objective, you just put in your stop loss, and price either hits your objective or it doesn't. And it's kind of the trade that you're not going to take a loss on it. Like you're going to put your stop loss so you at least are going to recover your costs. But you just kind of have to say, if it makes it to terminus, it makes it. If it doesn't, it doesn't. But this is just an example of what I don't like to trade. And this is how the trade worked out. So anyway, that's that. I'll be back tomorrow live at 9 a.m. So I hope you guys have a great evening. Okay, bye for now.